All right, everybody, welcome to another session of Dr. Stoxx talking about the market. Let's call this Market Talks with Dr. Stoxx. How about that? It is a Thursday session, the 3rd of October, and you're coming to you live from the Dr. Stoxx trading room, which is to be found on Discord. And if you're interested in joining us from the YouTube channel, you can go to drstoxx.com. That's drstoxx.com. Click on the live trading room button, and you'll be able to join us from there. Alrighty, so we've got a roller coaster ride today. Let me bring over some of the 5-minute charts that I've been looking at throughout the day. This is the QQQ, always our chart of interest, our index of interest, because it contains most of the stocks that we love to trade. And it's an up and down ride, right? So we had to sell off into the morning session, and then it started to build up into the ISM number. ISM came in right at 10 o'clock, right there in that candlestick. It was quite a strong number. So they were looking for something around 52%, and it came in at 54%. Anything above 50 is a growth number, so that's always good. 52, 54, both are good. 54 meaning really big growth, or more than expected. And that triggered an initial knee-jerk reaction to the upside. And unfortunately, knee-jerk reactions, the first reaction is usually not the one that the market wants. And it got faded by a whole bunch of algo selling, I'm sure. Algo programs kick in when the rally to the higher side hits a certain level of resistance. They automatically are programmed for that kind of thing, and then they kick in on the buy side when it gets down to a certain level of support. So they can work both ways. Nothing we can do about algorithmic trading. It used to not be a thing when I was starting out in this business. And in fact, there was very little in terms of high frequency trading. Now they're all programmed in. There's nothing we can do about it, but every now and then we get on the right side of an algo program, and it's a great ride, right? It's a lot of fun. Oh, right. So that's QQQ, up, down, up, down, up, down. I have to say that the volume today a little bit heavier than yesterday. Yesterday, very light volume. Today, heavier because of the ISM read that just triggered all kinds of both investment in the market and then selling to get out of the market, all within a few minutes of time. The S&P 500, very similar kind of chart, right? Here's your ISM number. It did get a little lower than QQQ, so QQQ didn't quite print new lows in the last couple hours, but SPY did. And here is, I want to show you this. This is a hopeful sign. This is the 3x leveraged version of the small cap index, the Russell 2000. And you can see it's in rally mode off the lows. So it really got up there twice up to highs of the day. And I was saying in the room that 4250, I think, is the number. If it can get up above 4250, it should have a really nice run till 45 or so, because that would be breaking through some intraday resistance. And we're not there yet. We got up pretty close. We got up above 42 a couple of times, just not able to hold those highs. So let's go over to IBD leaderboard. I haven't checked this today. I usually like to check in each day to see what stocks have been added or removed. And this is not really tradable information necessarily, because, hold on just one moment here. Not tradable information because you're going to see these stocks go on the top 10 list one day and then come off the top 10 list the next day, and it's all a matter of their relative strength on a day-to-day basis. So not that interested in this list, but if we go over to leaders near a buy point and we click on this little position summary and then we sort by date, we'll see that these are the ones that have been recently added to the leaderboard. And I have to say, I know the guy that runs this. I'm an IBD partner, and I know the guy that runs this service, and he's very good. He's very conservative trader. He likes to get into positions underneath breakout levels, but close to breakout levels, and he likes to hang on to them for several weeks, even months at a time. And so you've got a good list here always of the leaders of the market. Recent ad yesterday, this was yesterday, BRO, we've looked at this chart a few times. It's pretty much where they bought it, although these, I have to say the returns here are only updated on a closing basis, so we're not exactly sure where we're at today. He likes the Home Builders Index. Facebook is in here. DoorDash, not one I necessarily agree with, but I have to say the chart's been pretty good, and their timing into it was good, and several others. All right, so BRO, we'll take a look at that one since that's a new ad. Let's even start there. Yeah, so I like this chart too. I can see why they would buy it. Of course, we would love to get down here off the 50-period moving average. Here's a nice looking reversal hammer candle on very heavy volume, and then a reversal to the upside the following day. If you can see this three, let me put a box around it, these 3 bars right here, that's called a 3-bar reversal. Right, we have the slam down. Everything looks very bearish. Oh boy, everybody's getting out. Oh boy, everybody's putting on, buying some puts on this or selling some calls to hedge against further downside. And then the very next day you get this follow through, really deep cut low, heavy volume, breaks the 50-period moving average, gets below the LRC, scares everybody out of the position. And then by the time the market closes, it's all the way back up, giving you a nice looking hammer candle on very big flush out volume. And when you see heavy volume like this after a multi-day sell-off, not always. In fact, I don't know if I would even give it greater than a 65% chance, but 2/3 of the time, let's say that, that marks the end, the near-term end of that pullback. Then we got the reversal day, the very next day, above average volume, not as much as the previous days, but that's okay. We just need to see some above average volume. And then it's been slowly, steadily moving higher since then. That's the place to get in, right in that little pocket there, sometimes called a pocket pivot, although it's not giving us the volume pattern that would qualify as that. The very next day does, though. This big green follow-through, multi-big stick on a big, heavy volume day, that would be your pocket pivot. 3 days of modest selling pressure, 3 more days of upside, probably get a couple more days of selling pressure, and then more upside from there. So I like this position a lot. I like it so much I'm going to add it to my longs list, my greens list, I should say. Okay, let's take a quick look at the indexes, see what's going on here, because we want to make sure that we're not. We're actually, in terms of the positions in the room right now, we are sitting mostly in cash. And my strategy this week was to take some profits off the table. We did that. To tighten our stops, we did that. And fortunately, that also caused us, because of the intraday volatility, to get stopped out of several trades this week. We haven't had too many stop outs over the last 4 or 5 weeks, so we were probably due a bit of give back to the market, and that's just how it is with trading. But any new positions we've been putting on, we've been going very small in terms of size, and we've been trying to focus on higher quality positions or something that, technically speaking, is just pristine or superb. So we're being very selective is what I'm trying to say, and keeping as much as we can to cash. Why? Because tomorrow it's not exactly a coin flip. I do think we're leaning bullish, and of course I'm always accused of being a perma bull, which I'm not. But of course, if you're going to lean in either direction, bullish or bearish, you'll have the market tailwinds at your back if you choose bullish over bearish every time, because that's the historical trend of the market. Historical trend of the market is up. Bull markets last for a decade or more. Bear markets are usually over and done within a year. So you're more likely to be right by leaning bullish. But there are times where the market is telling us very clearly, this is not a good time to go long. We need to put on some hedges or some shorts or jump into some safe havens. This is not one of those times, however. The market is not giving us much yet in the way of clues about any sort of a downside move. So that's why we are cautiously optimistic. All right, back to the indexes. So SPY, we've been talking about, I guess I don't have my line on here. Let me put my line back on. That's the level right there. It's around 565, 566. I would take any little dip into 565 as being just, a pretty safe little dip. Not necessarily that you want to buy it, but nothing to worry about. We are at the midline of the uprising LRC, the linear regression channel. The 21 period moving average, that's the blue line here, is not far away, and we are right at a good looking former resistance, now support line. We've got the stacked MA, so the 21's above the 50, the 50's above the 200. The LRC is itself rising, and that's always a good thing to see. And we're starting to get, we're getting this little sideways pullback, right? Just a soft consolidation or discounting, or a little bit of taking some of the risk out of the market ahead of the jobs report tomorrow. All that's good, and this is why I think we're set up, technically at least, for a good bullish run. We've got oversold stochastics, and we looked at this yesterday, and it was just at the 20 line, and now we are below. 20 is a pretty extreme number, so anything below 20, anything below that green line there is an extreme oversold condition. And of course, the market can stay oversold for days, even weeks at a time, just as it can stay overbought days and weeks at a time. But typically in an uptrend like this, when the stochastics dip below 20, that's a very good time to start getting out your fishing line and going fishing, going shopping, trying to buy some shares. So SPY looks fine. There's nothing in this chart other than a couple of distribution days, right? There's this one. Let me mark these here. So there's a distribution day right there, and there is a kind of a modest distribution day right there. That was a very scary day. We keep talking about that candlestick right there, and everybody in my pro trader group got short that day. That was the Fed day, shot way up on the 50 basis point cut, then came all the way back down to close on the lows of the day on heavy volume, and everybody was getting defensively short after that rejection at resistance. I mean, that's just a classic, very bearish technical setup right there. We did not get short. We did not put on any hedges. We just weren't buying because the market didn't allow us to, because we knew that there's always the third response to any Fed announcement. There's the knee-jerk reaction on the announcement. There is the presser reaction when Powell is out talking to the press, and then the reaction to that. And then there's the overnight reaction, which is typically what the market is really saying about the Fed. And that was way up, right? Super bullish. Big gap up the very next day, rejecting all those shorts. Everybody had to cover, and they just got squeezed out of all those short positions. We had a gap down the next day, but it recovered, new all-time highs, soft pullback into a former resistance, now support. Everything is great, perfectly set up right here for a rally. Does that mean it's going to rally? Absolutely not. There's no guarantee. But just from a pure technical perspective, and there's nothing in here that would cause me to worry over much about where the market is going after tomorrow. All right, QQQ. It's not quite the same story. We do have the same kind of pullback, and it is into support. We have the 21 period moving average. We have the midline of the LRC. We have the stacked MAs. We've got oversold stochastics. Everything there is the same. It's just that we didn't have recent all-time highs. That came back here in, June? Yeah, late June. And we haven't been able to get back up there. So that's a little bit of a concern, right? If the market is not able to print new pivot highs, now we're not getting any lower lows, so that's a very good thing. It's a very good thing. But if we're not getting new pivot highs, then it sets up the very possibility that it is a brand new, a change of trend, in this case to the downside. However, all of that said, you look at the volume balance. Yeah, there's a distribution day right there, and there was a distribution day a few weeks before that right there, and really that's about it. Everything else is accumulation, everything else is light volume. We're getting some gap and craps up here, which just means that the market is getting a little tired, needs to consolidate. We're not seeing major big red sticks, right? Here's big red sticks, red stick, red stick, red stick, red stick, big ones, right? Big ones. Big red stick, big red stick, big red stick. Yeah, we had one kind of modestly big, and the rest are pretty small, and there's a lot of green in there, and it's all still pretty good. Not perfect by any means, but still pretty good. All right, so QQQ, cautiously optimistic that we are set up for, again, some rally starting tomorrow, I think, after the jobs. Small caps. So this one is the one that looks a little dicier. We've been selling premium on the leveraged version of the Russell 2000, the TMF, Exchange Traded Fund. I'm sorry, not TMF, TNA. And it's been not playing very well for us the last 2 weeks. So I think tomorrow is our rollout day. We probably will choose to close that one out. We've made, I'm not exactly sure what it is now, maybe $1,000, a couple $1,000 since we started doing this back in March per contract. And maybe it's time to kind of let it go. It's just not catching a bid. Now, if the jobs number comes in hot, you're going to see small caps really get hurt tomorrow, because that means the Fed is not going to be cutting rates, and the small cap group, particularly the regional banks, which are a big part of the small cap index, they're going to be hurting, right? Because they're not going to be getting all those new loans they thought they were going to get. They're not, anyway. And small cap companies, smaller cap companies rely a lot on business loans, small business loans, to keep their company afloat, to make payroll. And if the interest rates that they're paying on those is too high, their margins get squeezed, and it just becomes a problem. So watch small caps. They are a big clue to the next market leg. If the market is happy with the economy, happy with the Fed, and convinced that inflation is mostly behind us, you should see small caps, bonds, home builders, biotechs, banks, especially the regionals, which should start to see those guys rally nicely. But I have to say, right now, this is not, right? This is a downtrend. There's a lot of red in there, right? A lot of gap and crap kind of days. You can see down here the volume balance is pretty much all bearish. Some good points here, though. Stacked MAs, uptrending LRC, uptrending 200, oversold stochastics, and we're bouncing today off of the 50-period moving average, which is exactly the thing that you want to see hold as support. Why do you want to see the 50-period moving average hold as support? I mean, it's just an average, right? What's the deal? Well, here's the deal. Big money managers, hedge fund managers, key on the 50-period moving average, especially for the indexes and for major stocks like Apple and Microsoft. When the stock comes down to the 50-period moving average, they already have their buy programs coordinated there. They start buy, just going hammering on the index, on the stock, when it tags the 50-period moving average. If the stock bounces from there, if the index bounces off the 50, that means that their program is successful. It's overcoming the selling pressure on the downside. That usually, not always, but usually starts to trigger a reversal back to the upside. So we want to see a good bounce off the 50, signals that the funds have been successful in their buying programs. Let's see if we get follow through tomorrow. Speaking of bonds, we are down here in the pink zone. We're down at the lows of the day. That's not a good look. We've been down here before, and each time, the very next day, when we're either in the pink zone or below the pink zone, especially when it closes on the low, we get a bounce up the next day, a gap up the next day, and that triggers a multi-day rally. 3 times we've been down here, and here we are at the 4th. So I'm going to consider today to be the equivalent day of that red stick and that red stick and that red stick, which means that if we don't get a gap up tomorrow, and we certainly will if it's a Goldilocks jobs number, if we don't get a gap up tomorrow, I think bonds are off the table. This looks to me like a fresh downside breakout, and bonds are then a no-go zone for me for a while. Now we've been making money every week with TMF. We were in the covered call portion of our wheel play with that, and it's going to be hard to sell the right strike price of the call in order to not lose money on the shares but still make a bit of money on the premium. And the further away we get from the strike price of the shares that we got put into, the harder it will be to make money. So I think if we don't get the gap up tomorrow, I'm out. We'll bank TMF, again, maybe a couple $1,000s of profit per contract from March in that. And it's been good for us. We'll probably be back in, but better to let it go. So bonds right now looking kind of iffy, but a really big day tomorrow could be the turnaround for them. All right, let's take a look at let's take a look at some of not the memes. Let's take a look at the mags. Right, Tesla, not a good day for Tesla. Despite some new product news about batteries, they're still reeling from the gap down yesterday on the delivery numbers that missed expectations. I know Tesla seems to always miss their delivery numbers, and they just kind of move on, and then they're back up to near-term highs. This gives me a good opportunity here to point out this particular trading setup. So I had a lot of questions. Is Tesla gap down yesterday, tagged the 21 period moving average, and started to rally back up and closed up near the highs of the day? That to me looks like a nice looking dip to buy, right? An opportunity to get Tesla well under the 260 that is a line of resistance. It was down there at 240 or so. I said, no, it's not a buy. And here's why. Because when you hit a level of resistance and you can't get through, and then you gap down the next day, that's a major red flag. Technically, that's a lot of damage in the chart. And usually what happens is that you get you get this resistance, right? It's a whole box of resistance located at that gap. And it's hard to get back up there. You can see that it got up there earlier today. After the open, it rallied higher, got back to green on the day, just tagged the bottom of that box, and then it's all downhill from there. So that's gap resistance. And after you hit and this is not 52-week highs, and it's nowhere near all-time highs, but it is multi-month highs, and a level of resistance, and then gap down the next day. It's a no-go zone for a while. It could be dead money for several weeks. So Tesla's off my list. Amazon, this is in a show me place right here, because it has broken the support trend line. Looked very good last couple of days, right? Nice little hammer candle when the market wasn't very happy. In fact, it was one of the only mags green that day. Broke above the highs of the previous day yesterday, closed lower. That's not such a good sign. And then gap down today and hasn't been able to close that gap. And now we're underneath support. So the LRC is starting to tip, right? It used to be in an uptrend not too long ago, and now it's starting to tip to the downside. We still have the stacked MAs, market balance, volume balance is okay. We're deeply oversold. This is the lowest stochastics, I think, since mid-July. But until it gets back up above the supporting trend line, it's a no-go zone, and it probably actually could be a short from here. Apple is just still coiling up, not really going anywhere. It's been a real mess. This whole period right in here would be a very frustrating hold if you're a swing trader. You had the big breakout day, Yay, close on the highs, good volume, highest close in weeks, and then it's a big slam the very next day. That's not my kind of trade. For me, on a trending stock, I like to get in down on a pullback at support or on a breakout that has some good volume behind it, so it looks like the real thing, and not seeing an ounce, not even a hint of bearish divergence in the momentum indicators. So you got all of those together, and yeah, you can buy a breakout. Otherwise, I would prefer to buy a pullback. This is not a pullback. We're right in the middle of the range. We are above the 50. That's good. We're above the support line. That's good. The LRC is rising. That's good. But it's just been a frustrating hold. So it's on watch. I'm not opposed to buying it. Even here, I'm not opposed to buying it, but it's just not a high quality setup. Netflix is doing very well. So everything is rising. Stacked MAs broke out to new all-time highs a few days ago, and it has been holding, despite some pullback in the market, it's been holding above that level of resistance. All that's good. Now, there was some distribution up here, so we have to be a little careful. That's the kind of thing that could flag, it's like an early flag for maybe it's going to pull back. But as long as it stays above that black line right there, which is 701, I think it's a good one to buy and hold. Qualcomm is ugly. Microsoft is ugly, and this really has a lot of potential here to break to the downside. All that volume on the selling pressure is just not a good look. And we're losing today the 200. We already lost the 50 yesterday. We lost the 21 the day before. So none of that is good. The only saving grace for this would be a great jobs number tomorrow. We get a big reversal to the upside, and then it's see you later, STL. Let's go back to 460. That's possible, but it's going to take some cooperation from the data. Google still waiting for this to get back up above, what is that, 167 or so? Not there yet. We're already long AFCO. It's doing great. It's holding above 21 midline, resistance line. All that is good. Facebook is probably the strongest one now. It's up near or at new all-time highs. And 600 looks like it's pretty much a lock before earnings. AMD, I'm curious about this one getting out of this long-term pullback. This is a long-term pullback. And you can see, stock that is falling in a downtrend tends to print higher lows and lower lows and lower highs, lower lows, lower highs, lower lows, lower highs. And then all of a sudden you get a higher low and a breakout of the most recent pivot high. That would signal the end of the downtrend, and that's exactly what happened right there on that day. So nice follow through the next day, a little bit of a light volume pullback into the neckline again to retest. Big green stick today, despite a red market, mostly red market. So it's doing well, right? It's bucking the trend, but it's still underneath resistance, still not yet flagging a good solid buy signal. And NVIDIA, we're long NVIDIA as well. This is really banging up against that RTL. The 21 is now above the 50, so we have the stacked MAs. The LRC is now starting to rise higher as the low data points fall off and these higher data points are added on to the front end. This looks to me like, and one of the reasons why I think we can be hopeful about tomorrow is that the market is telling us through NVIDIA that it's ready to rally. It really is. This is a nice looking setup, and that's why we're long, right? We're already long. All right, let me just flash through some of my greens list. We saw some of them already. I'm still long ASTS, waiting for that to break out. It looked better earlier today. It's kind of flagging. So it's getting tired today. Wix looks pretty good. It looked better earlier, but a good reversal day yesterday off of the support. Holding steady on an inside day bar today. Labu is still above support. Doesn't look very good, however. Like it's ready to, with all that volume down there. We are actually long Labu. We're still above our stop. We had some good profits. Even this morning had some good profits in that position. Probably should have gotten out of it, but well, it's a smaller size, so we'll let it run. Let me see. We are long some XBI calls, but going to have a good day tomorrow. We really need to bounce off of that STL. I like Chewy, and it is sort of ready to break out of this pullback trend. It needs to get to about 29.30, I think it is, to get back above the 21 period moving average, get above recent highs, and then it really should start to fly. 33, 34 is probably the target there. I've got Yang on my list, not because it's a technical setup, but just because China rallied so strongly on government intervention, which can't last forever. So I'm just kind of waiting for this to get some better inflows. Right now it's not there. And let me see. C1 is a stock in my trend trade letter. I really like the pullback here. So new highs, soft pullback into the 21 period moving average, which is rising. Big green stick today. All looks good. All looks very good for a run up here to the blue zone. So from 25 to about 28 or so. VERX, one of my favorite software plays, is in breakout mode. Very strong, strong momentum. Don't exactly know why it's so strong in recent trade with the market being very quiet or even falling, and it's just going straight up. So it's not really a buy here, but it certainly is a hold. I have my trend trade letter members in this one, VERX. Halo is a biotech stock, and we were in this not too long ago. And I did have it on my radar down in this area at the LRC, and I just thought, it wasn't getting much traction, right? Kind of took it off my watch list, and then boom, 2 days later, straight back up. This is a fresh breakout, still lots of upside. It would test resistance at 65, so that's a 7-8% rally, but your other target would be up here around 70 in the blue zone. All right, guys, I'm going to look over here at Discord, and if you want to type in some ticker symbols, I see a couple already. We'll take a look at these. I'll just do one per person. MSTR, Bitcoin play. We were in this one a little while ago. We took our profits into strength on, I think it was on that day. Went a little higher. Now it's coming back in. And so this, you don't get into this one unless you're bullish on Bitcoin. So let's take a quick look at Bitcoin. Yeah, it's been a tough hold. Certainly very much still in a downtrend, and whenever it gets up anywhere near that trend line, the RTL, it falls off. Everything is falling, right? The MAs are inversely stacked, not exactly what you don't want to see. But it is Bitcoin, and it does, or it could potentially have some very strong political tailwinds if Republicans get back in charge of things. And I do think it's a good play against the weakness in the dollar. And I haven't really looked at the dollar lately, but if we do see the dollar falling, and I know gold's been up high, Bitcoin should do pretty well on that. So MSTR is an interesting play because you don't buy it for their software products. You buy it because they are buying Bitcoin hand over fist. The owner of the company loves Bitcoin and has just been adding assets. And he's doing this thing where he's selling convertible debt and he's selling new shares. He's diluting the float, using those proceeds to buy more Bitcoin. I don't know. I assume that's legal. I think it's legal, but it's really it's just a shell company practically for Bitcoin right now. Now, this is not a bad setup. So the LRC is falling, but we've got stacked MAs. Volume balance recently has been good. That's a very strong momentum rally off the pink zone into a form of resistance. It pivoted there, so that's a little bit of a concern, but it hasn't been falling sharply, and it's not falling on heavy volume. And today looks like potentially a reversal of that. So I like it. I would give it like maybe a B minus. For technical setup, and maybe a C plus on the fundamental side. But it certainly is a fun trade when it really gets going in the right direction. Oh boy, I have to scroll up here to see what you guys are interested in. All right, Nike and Dell. So Nike came out with earnings, big gap down, and this is exactly what you don't want to buy. It ran up here into the blue zone. It's not exactly a price resistance. Well, actually it is, right? So it was formerly support, horrible earnings, rallied back up to test that level, and then got whacked again on earnings. So if a company's getting whacked repeatedly on earnings, even when it is a beat, I know they beat on the top end. I'm sorry, let me take it back. They beat on the bottom line, but not on the top line. So you get this little green triangle here if you beat earnings estimates, but not necessarily sales estimates. Big slam down, and like I just said with, what was the other stock we were looking at? Oh, Tesla. Like I said with Tesla, when you run into resistance and then get slammed down the next day, it puts a lot of resistance in that space. And until that closes, and it could be weeks before that closes, you're not getting any upside traction. So it's a no-go zone for me. I would even short it. If I had to take a position, I would be short. Dell is not bad. So we've got the 21-period moving average has given a bullish crossover. We've got oversold stochastics. We had some major, I don't know what's going on with that day right there, that big green stick, and we had a couple of others before then. So some big fund, I assume, if that's a legitimate print, is loading up on Dell. Now this is an AI play. You know, Dell has been around since I have been trading, and it was always a play on their computer products. But now they're moving into, they're building the servers that will form the infrastructure for AI. And so that's a big deal. They're not the only ones doing it, however. IBM is also in the game and some other guys, but they've been around a long time. They've got a great manager, and I think it's a reasonable play. So multi-month breakout to not all-time highs, I'm sorry, take it way back, to multi-month highs, and then it's been a slam pretty much with the market back to the 200, couple of little reversal days here, but the volume is pretty light. So this is not a buy right here. We want to see heavier volume. We want to see a good sustained upside day. We're not seeing that yet. This is the kind of thing that could just, let me get my marker out here. The kind of thing that could just flag for a few days and then roll over and give us another leg down. That's kind of the path of least resistance. All bets are off tomorrow, of course, with the jobs numbers, but Dell's not a buy. I like it as a longer-term fundamental play, but it's not a technical buy here. TLT we did already. Let's look at Boyle. Yeah, not bad. I know everything's downtrending. We do have a fresh 21 cross, and it did break out above 11, so that's good. 11 would be your floor. So if you're long this one, you'd put your stop just underneath, and it's up here at 12. That's a good move. And target price, let's see, 13 is going to be your major hurdle, right? There's a lot of overhead supply right in that area. So 13, if it gets there, it probably will reverse and do some kind of a pullback before going higher, but it could be a while before that breaks. So not a whole lot of upside here, but if you want to hold it until 13, if you're already long, it's a hold until 13. If you're not long, I wouldn't. There are better setups out there, much better. IONQ. All right, well, some good things here. Huge volume on that big up day, so I don't know why this gapped higher. That's a major move, huge volume. The only drawback is that it did fill back in again. So when you get these big, what I would call revaluation gaps, right? Whatever the news was, the market is saying it's no longer an $8 stock, it's closer to a $10 stock. And then the very next day, it's back to $8 again. So that's a concern. You have to figure out why did it gap up and what doesn't the market like. But the fact that it flushed everybody out, all those new longs that had to scramble to to sell down here below 850 probably. They got totally trapped, and it's right back up again here to 928. So if you don't like that, if you don't mind that kind of volatility, I would say that this probably has some good momentum to the upside, up to 10. I don't know if it's going to get much higher, and I don't know the fundamentals of the company, and I don't know why the market seems to like it very much right now. So if you're confident with those things, then yeah, this could probably get up to 1150. And that would be a nice trade. That would be a very nice trade. NPH. All right, so solar's just been kind of a weird sector, not really getting a whole lot of traction in a lot of the major components. ENPH, I have to say, it was one of my favorite semiconductor technical plays for a long time until it peaked out way up there, right? $330 something dollars, and here it is way back down to 106. So it's been a no-go zone for me since then. Yeah, you could trade it off support like this. So if you want to just catch a little 2 to 3 day bounce back up to maybe 115, that would be a nice trade. That's a nice move, but that's all you're going to get from this until fundamentals improve, until the political structure is more conducive. I don't exactly know. Elon Musk seems hugely optimistic about solar. I don't see it. I'm not buying it. We just put solar panels on our roof about a year ago, and we're still paying utility bills because they don't generate enough electricity for our rather large house, right? So, yeah, you can't convince me yet that solar is here to stay. Musk thinks it is, and that's fair enough. But to me, I just haven't even looked at the zone. I haven't traded a solar play in probably all year. So anyway, you take that for what it's worth. It's a little bit of a trade off of that support line, and that's about it. We looked at Facebook. Let's see. Well, we're already long PLTR, so you know that I like that one. And we got in this little consolidation right in here, which illustrates a good point. So we do trade breakouts every now and then, but it's a lot, in my opinion, a lot more difficult. It's a lot more of an art trading breakouts that don't trap you, as opposed to getting in at support inside of consolidation as long as you're uptrending, right? We want to find that uptrend. Stacked MAs, big sign of an uptrend. The rising LRC, big sign of an uptrend. All three MAs are rising, big sign of an uptrend, right? It's not rocket science, that part. So find an uptrend, get in at support, get in inside of consolidation, get in inside of a pattern like an inverted head and shoulders or a cup and handle, some kind of a continuation pattern, ascending triangle, symmetrical triangle, all of those are good. And then boom, wait for the breakout. That's exactly what we did with PLTR, and it's doing really well for us today. It's one of our better plays today. DVA, well, DVA, we got stopped out of this yesterday, and on that red stick, the break of the 21 period moving average. I actually kind of like it a little better now than I did. We bought it up in here. Again, consolidation, clear uptrend. Everything's rising, stacked MAs. This looks beautiful, right? Absolutely beautiful. We got inside of consolidation, and we had a tight stop, and then we got stopped out for, I don't know, less than a 2% loss. Not a biggie. I like it here, however. A reversal candle at the LRC midline. It's probably a better setup now than it was when we bought it. So yeah, this is a go. And I also know it's on the leaderboard of IBD. It's a strong company. I'll do one more here. STNG. All right. Well, this is not an uptrend. This is a downtrend, obviously, and we are above the LRC, and we're even above the blue zone, which is your 2.0 standard deviation away from the midline, and that's not a good place to be a buyer for sure. Now, it could be that that this is in a fresh breakout, or will soon be. You know, all downtrends. I shouldn't say all downtrends, because some downtrends never recover, right? They go on to penny status. But if a downtrend is going to, you know, let's say a company goes through your typical cycle. You've got the expansion phase. You've got what's the phase at the top? Consolidation or something. And then you've got the contraction, and then you've got the trench down at the bottom. And as long as they're a healthy company going through these various business cycles, the contraction phase has to come to an end. That may be what's happening here. Maybe. Good volume, right? In recent trade, we have regained all the moving averages. That's good. That's good to see. 21 is now rising. The 200 in a longer term moving. Sorry, let's look at the weekly chart of this. The longer term. Yeah, actually, this looks good, right? This is your longer term uptrend. Fresh 21 over 50, 200 is way down here. LRC is rising nicely. Came all the way down to near the pink zone and have been in a 3-week rally since then. I like this. I like this as a potential end to the near-term downtrend. That and might even be today breaking out of that pullback. That's a multi-month pullback. Finally, might be ready to rally back higher again. And then your target would be up here. It's going to be around 88 to 90 into the blue zone. And here we are at 74. Now that's a longer term trade, right? You're looking at several months down the road, but that does look pretty good. I like the weekly chart. Don't necessarily like the daily chart, which is a little bit iffy. Maybe a little bit of a pullback coming, but this looks like a nice pullback breakout chart. All right. I'm going to let you go, guys. Have a great rest of the afternoon. I'll be back in the room in a little bit. God bless. And we will see you back in the room just a little bit. Bye for now.